Welcome to Cost Saver Conversations. I'm Angela, and I ask the practical questions so you can quickly understand what matters. Today, I'm joined by Assad.
Hi, Angela. We are unpacking Car Insurance Group's UK, how your group impacts premiums and what drivers often overlook today, and tying it back to the wider cost saver ecosystem, including tools like Car Insurance Group Tool, Car Insurance Group Lookup, and Car Insurance Group Lookup Tool, so you can turn insights into action quickly.
Just a heads up before we dive in, we are your synthetic hosts. We are great with numbers, but as AI, we can sometimes be confidently wrong. Think of us as the digital versions of your most knowledgeable, slightly caffeinated friends.
Exactly. Treat this chat as a smart estimate only, not as professional financial guidance. Always check important details with official sources or a qualified expert before making any big decisions.
Welcome back to the Cost Saver Podcast. Today, we're getting into something that, honestly, I think most of us just kind of glaze over when we're buying a car insurance groups. Assad, this is one of those things that's, like, really important, but nobody pays attention to it, right?
Yeah, it's kind of wild actually because it's one of the biggest factors behind your premium, but it's literally just a little number buried in a spec sheet. You see Insurance Group 12E and you just move on.
I have absolutely done that many times. So, okay, break it down for me. What actually is a car insurance group?
So it's a rating from 1 to 50, and it's set by an organization called Thatcham Research. They're a not-for-profit funded by the insurance industry, and they've been doing this since 1969, so over 50 years now. And that single number, that one number, can be the difference between, say, a 600-pound annual premium and an 1,800 one.
Wait, 600 versus 1800?
Yep,
That's triple.
it is. And if you bought your car without checking its group rating against alternatives, you could easily be overpaying by 400 to 1200 a year. And for younger drivers or people with shorter no claims histories, the gap gets even wider than that.
Oh, wow. Okay, so Thatcham Research, what are they actually looking at when they decide where a car lands on this scale?
Good question. It's not just the price tag. There are five main things. First is repair cost. How expensive are the parts and labor after an accident? Then repair time, which people don't think about, but insurers are paying for courtesy cars while your car sits in a body shop, so that matters. Then new car value, the on-the-road price. Performance, top speed, acceleration, because faster cars statistically crash harder. And then security, locks, alarms, immobilizers, tracking, all of that.
I hadn't thought about repair time being a factor, but the courtesy car thing? Yeah, that makes total sense, actually.
Right? It's one of those hidden costs that just adds up.
And I've seen these letters after the numbers, like 12E or 34A. I always assumed that was, I don't know, a version number or something.
No, it's actually really important, and this is one of the most overlooked details. So E means the car meets the expected security standard for its group. A means it actually exceeds it, which is great. But then you get D, P, or U, and those mean it falls short. U is unacceptable.
Unacceptable. That sounds bad.
Yes, not great. And then G just means provisional. They're still gathering data. But here's the thing. When you're comparing two trims of the same model, the one with the E or the A suffix will almost always be cheaper to insure than one with a D or a P. And nobody checks this.
Okay. So does the jump in premium feel the same as you go up the scale? Like, is group 1 to 10 the same kind of jump as group 30 to 40?
No, and this trips people up. It's not linear at all. Moving from group 1 to group 10 might add, $50 to $150 a year for an average driver. But moving from group 30 to 40, that can easily add 400 or more. The jumps get much steeper as you climb because high-end cars carry disproportionately higher repair and theft risks.
So it accelerates.
Exactly. It accelerates. And then on top of the group, your personal details get layered in. Age, postcode, occupation, claims history, mileage. So two people in identical cars can pay very different amounts.
Right. Okay, so that's the system. What are the things people actually miss? The hidden stuff?
So this is where it gets interesting, honestly.
The first big one, and I think the most expensive mistake, is trim levels. People assume, a Ford Focus is a Ford Focus,
Yeah, I would assume that.
but it isn't as far as insurers are concerned. The base trim might sit in Group 12, the sportier ST line, Group 18, and the full ST Performance version can leap to Group 31 or higher.
Oh, that's a massive.
Massive jump, yeah. And we had this example, Sarah from Leeds. She was choosing between a Focus Titanium, which was Group 14, and an ST Line X, Group 22. The cars were only 2,800 pounds apart on the forecourt.
Okay, so not a huge difference in purchase price.
Right, but her insurance quotes came back at $680 for the Titanium and $1,140 for the ST Line X.
Wow.
And over 5 years of ownership, that cheaper upgrade ended up costing her an extra $2,300 in premiums alone. Just wiped out any value she thought she was getting. And the thing is, salespeople rarely volunteer this information. They're not going to say, oh, by the way, this trim's going to cost you $2,000 more to insure.
No, of course not. That's kind of infuriating. What else are people missing?
ADAS, Advanced Driver Assistance Systems. So things like automatic emergency braking, lane keep assist, adaptive cruise control. And you think, logically, these should make your insurance cheaper, right? Because they prevent crashes.
Yeah, that's what I would have assumed.
And for accident frequency, the data is starting to show they do help. But, and this is the catch, the repair cost is a nightmare. A modern car bumper might house radar sensors, cameras, ultrasonic detectors. A low-speed shunt that used to cost 400 pounds to fix can now cost 2,500 pounds because every sensor needs recalibration on specialist equipment.
So the thing that's meant to save you money is actually making repairs more expensive?
Yeah, essentially. It depends on whether the safety benefit outweighs the repair premium in Thatcham's modeling. But you cannot just assume new safety tech means cheaper insurance. Sometimes it does, sometimes it doesn't.
That is so counterintuitive. Okay, what about EVs? Because I feel like everyone's being told to go electric.
Oh, EVs are a whole thing. They've caused real headaches for insurers. The cars often score well on safety, but the economics are just different. Battery packs are extraordinarily expensive to replace, sometimes 15,000 pounds or more. Even minor damage to the battery casing can write off the entire car. Repair networks are still catching up, so you get longer courtesy car bills, and some insurers have actually pulled out of the EV market entirely.
Wait, really? They've just stopped offering cover?
Some have, yeah, or restricted it. So an electric hatchback can sit in a noticeably higher group than its petrol equivalent. And people who switch expecting lower running costs sometimes get a pretty nasty shock at renewal.
So the fuel savings are real, but the insurance can eat into them.
Exactly. So if you're considering an EV, and I cannot stress this enough, get insurance quotes before you commit, not after. The group rating may genuinely surprise you. And it's worth looking at specialist EV insurers, not just the mainstream comparison sites.
Oh, that's actually really good to know. I hadn't thought about specialist insurers. Okay, so practically speaking, someone's about to buy a car. What should they actually do?
So there's a 5-step check. First, look up the insurance group for all your shortlisted cars and, crucially, for every trim level, not just the one you like best. Second, get rough insurance quotes for 2 or 3 of them before you commit. Even 15 minutes on a comparison site gives you useful data.
Go on.
Third, check that security suffix. Prioritize E or A over D, P, or U. Fourth, and this is the one people skip, factor in 5 years of premiums, not just one. That 400-pound annual difference becomes $2,000 over a typical ownership period. And fifth, consider total cost of ownership. Fuel, tax, servicing, and insurance, not just the sticker price. Does that make sense?
It does, yeah. It's about zooming out a bit, isn't it? Not just falling in love with the car on the forecourt.
Exactly. Don't fall in love on a forecourt. Fall in love with the spreadsheet.
The spreadsheet. Okay, so once you've bought the car, the group's locked in, right? What can you actually control after that?
Plenty, actually. The single most powerful lever is your no claims discount. After 5 clean years, it can shave 60 to 75% off the base premium. That's enormous.
60 to 75%. That's
Yeah, it's the big one. And then there's choosing a higher voluntary excess, within sensible limits, obviously, parking off-street where possible, limiting your annual mileage to what you genuinely drive. You can add a named experienced driver to the policy, which can lower the average risk profile. But, and I have to say this clearly, never engage in fronting. That's where you declare an experienced driver as the main driver when a younger one actually uses the car most. That's fraud, and it will void your cover.
right. Yeah, don't do that.
And pay annually if you can, because the interest on monthly payments can run at 20% or more, which is kind of a lot.
20%. That's credit card territory. Okay, flip side. What quietly pushes your premium up without you realizing?
Oh, there's a list. Modifications, even cosmetic ones. Aftermarket wheels, window tints, living in a high theft postcode. Frequent address or job changes can trigger underwriting flags, which is one people don't expect. Adding young or inexperienced drivers, obviously. And the big one, auto-renewing without comparing.
Huh, fair enough. I'm definitely guilty of that one sometimes.
Most people are. So here's the tip. Set a calendar reminder 21 days before your renewal date. Quotes are usually cheapest around then, and you legally have to be offered your renewal price for comparison. Auto-renewing without checking almost always costs you money.
21 days. Okay, that's going straight in my phone. And oh, actually, I wanted to ask, does shopping around hurt your credit score? Because I think people worry about that.
No, it doesn't. Insurance quotes use a soft search, which is invisible to lenders, so shop around as much as you want. And you can cancel a new policy within the 14-day cooling-off period if you change your mind. You'd only pay for the cover you actually used. And switching insurer doesn't reset your no-claims discount either. Your new insurer accepts proof from the old one, usually just a letter or a PDF.
Oh, that's actually reassuring. I think a lot of people assume switching is this big, complicated thing, and it's just not.
It's really not. The friction is mostly in your head, honestly.
Fair. Okay, before we wrap up, can you give people a quick sense of what kinds of cars sit where on the scale, just so they have a mental map?
Sure. So groups 1 to 10, small economical cars, base trims, the kind of thing that's sensible for new drivers. Groups 11 to 20, you're looking at mainstream family hatchbacks, small SUVs. Groups 21 to 30, mid-size saloons, larger SUVs, sportier trims of mainstream cars. Groups 31 to 40, premium and executive stuff, performance variants. And groups 41 to 50, that's your high-performance, luxury, exotic cars and also some high-spec EVs.
And those are rough guides, right? You'd still want to check the specific car.
Always check the specific car. Always. Have I explained all that clearly? Because there's a lot of moving parts here.
Crystal clear. Okay, Assad, give us the if you remember nothing else version.
Right. So, check the insurance group before you buy the car, not after. Check every trim level, not just the one you fancy. Look at that security suffix. Factor in 5 years of premiums, not 1. If you're looking at an EV, get quotes first. And then once you own the car, build your no claims, don't auto-renew, set that 21-day reminder, and never lie on your application about mileage or parking or who's driving. A few minutes of research can genuinely save you 4 figures over the life of the car.
Brilliant. That's opened my eyes to stuff I had no idea about. The trim level thing especially. Thank you, Assad.
My pleasure, Angela. Thanks for having me.
Quick side note, this guide connects with other cost-saver blogs, especially free ways to cut energy bills this winter, choosing an insurance excess that fits your budget, and hidden risks of deferring home maintenance.
Exactly. And reading those together helps you connect the dots across your household budget, not just this one topic in isolation.
And if you want to apply this immediately, jump into tools like Car Insurance Group Tool, Car Insurance Group Lookup, and Car Insurance Group Lookup Tool right after this episode.
Primary sources used here include Thatcham Research and Money Saving Expert, so you can verify the data yourself and stay evidence-led.
That wraps this cost-saver conversation with Angela and Assad. If this helped, share it with someone who could put these ideas to work this week.
Your next step is simple. Try Car Insurance Group Tool, then read Free Ways to Cut Energy Bills this winter and use them together to take action today.